Before the weekly analysis begins, I just want to let you know that I do have a Patreon page. We have two tiers available. The first tier is called Start Off for £15 a month, and what you will receive is access to a Discord server containing the beginners, intermediate, and advanced course, risk management course for Elliot wave trading, as well as financial literacy content. This tier is also for those who want to learn at their own pace and generally just support what I do and just join a community of like-minded traders. The second tier that I have is called the Waveologist for £35 a month, and what you receive is everything that I mentioned above with the addition of specific chart requests for me to annotate on a daily and weekly time frame, and one-to-one support or group sessions depending on how many people have subscribed to this tier. The group or one-to-one sessions are for those people who want a little bit of extra help with their Elliot Wave education, and also give the opportunity to ask me as many questions. Please do keep in mind that these are going to be 1 hour sessions depending on how many people have subscribed, and also I would say please do consider joining. It is really good value for money, and without further ado, let's get into the analysis. Alright guys, welcome back. This is going to be my Elliot Wave update on Bitcoin, but first of all, any views or opinions or suggestions that are expressed in this video are my own ideas and do not constitute to trading or financial advice. So let's get started here, and let me add my annotations in. So obviously we had this sort of A, B, C. You're currently in the C wave, and we've had this sort of wave 4, and I did say in my previous video that we're going to eventually come to take this extreme. And if you look at it, right, we have gotten a 1, 2, 3, 4, 5. This is a textbook impulsive move. You can see that wave 4 here comes to around 38% or so and rejects and continues going up to give us our fifth and final leg. Wave 2 rejects about 50 to 61.8% of wave 1, and wave 3 is obviously the longest, hitting about 1.618 or 2.618 of wave 1 to wave 2. And when you look at the day time frame, we do have this nice sort of pin bar rejection once these extremes have been taken out. Now, that doesn't mean necessarily that we're just going to sell straight away or anything like that. However, it is a price action that we like to take into consideration. And it is giving us the sort of vibe of, we will eventually start seeing some seller coming in. The way I see this sort of wave 5 going is as a 1, a wave 2, then we have a 1, 2, 3, 4, and a 5. So this is a wave 3, and where we are currently is in this sort of wave 4 of this wave 5 leg. So I am expecting one more push up higher to give us our fifth wave completion, and that would eventually give us a wave 4. And for those people that trade things like double tops and double bottoms, this will obviously eventually give you a double top to then hopefully bring this market to a downside. Now, how do we sell this market? How do we know when to get in? Well, we got a first entry, well, not a first entry, but a first signal saying from price action confirmation that the daytime has shown signs of weak rejection. So to me, that the sellers are starting to come in. Once you get that fifth wave completion, where we expected one more higher here, we might get another sort of pin bar rejection, and if that's the case, we get a double pin bar. That's excellent confirmation to go for a sell. However, anything can happen, and for me, I don't just like selling at the top after this price action. I want a bit more confluence. So the best way for me that I do it is I come to this wave 4 here, analyze and look at this and understand that this is the previous high or low. This is the previous market structure before a high was created. And if we all of a sudden start to see this market eventually sort of come back down and break this market structure, and this sort of market closes below this level, then we can understand and identify that this is considered as a market structure break. And then once this market structure is broken and we do see the sort of market eventually close below this level, we're then going to eventually get a three-wave correction up to about 50 to 61.8% of this initial push that breaks this market structure. And then once you get price action around here on the lower time frame, we can then see to look to sell this market to the downside. So that's sort of the obviously the bearish count that I have in mind, and the bearish sort of scenario that I have in play, which is what I'm kind of focusing on. But it doesn't necessarily mean that we can't just focus on the bearish side. We have to also focus on the bullish side. So I've also said that maybe wave 4 could have ended right here. Sorry, wave 4 here, and this fifth wave is currently in, and wave 5 has already come in, and this basically completes our sort of ABC corrective structure. And what we are currently seeing is this sort of wave 1, a wave 2, a wave 3, wave 4, wave 5 as an impulsive move. Now, I wouldn't consider this to be an impulsive move as of yet. The reason why I won't say that is because although it has given us an impulsive move, I have not seen a break of this previous wave 4 or the previous lower high before the low was created being broken. We've only got wick rejection as of yet. So if the market does eventually sort of push up and close above, that will be considered as a break in market structure of this level. We'll then look for a 1, 2, 3, 4, 5 to be completed, and then a deeper 1, 2, 3 wave correction, rejecting 50 to 61.8% of this entire impulsive move, to then wait for price action confirmation to give us the thumbs up to see whether or not, if this is a go, or to eventually continue going up to the upside. And obviously for those guys that do have big accounts, I wouldn't recommend this, but we usually place our stops at 100, so around here, and around 61.8%. I mean, this is too much of a big stop loss. I wouldn't recommend anybody doing this. It's pretty stupid. But the way I would do it is, once I get the sort of price action confirmation from this 50 to 61.8% level, I'll then wait for a nice 5 wave impulse move coming up, breaking the market structure here of this sort of B wave or this X wave. And then once this sort of market structure has been broken, we're then going to get another corrected 3 wave structure to give us a wave 1, a wave 2, and then eventually continue up for a wave 3. But that's the basically the update. This is a bullish as well as a bearish scenario that can be in play. I hope you guys do like my video. Please do like, comment, share, and subscribe. I do have a Patreon for those people that are interested in mentorship. The link will be in the description down below. And yeah, I'll see you guys on to the next one. Take care.